I wanted to make a quick video today on the Bitcoin price and why it's dipping just a little bit. And to do that, I'm going to jump into three of the key reasons. So first is actually leverage and hedge funds manipulating the price. Number two is the spot Bitcoin ETF activity decreasing in terms of buying power. And number three is Bitcoin miners capitulating a little bit. So if we go into the first one in terms of leverage and hedge fund activity, what you can see here on this graph is in those highlighted yellow bars, this is where liquidation activity is at its highest. So you can see here at $63,800, there's $93 billion worth of liquidations. This is just on one exchange called Deribit. Now, if you're not overly familiar with what liquidations are and how they work, basically, it's when people speculate on the future price of something. If they think the price is going to go up, that's called going long. If they think it's going to go down, it's called going short. If we use the example of somebody who wants to go long, let's say you had $1,000, you can take out 20 times leverage, which means you can have a bet or a position size of $20,000. If the price of Bitcoin went up 10%, well, you made $2,000 because your $20,000 bet went up $2,000. And you only had to put $1,000 down to have that $20,000 bet, right? That's your 20x leverage. Now, where it's interesting though, is that if the price of Bitcoin went down by 10%, your $20,000 bet goes down to $18,000. So you're minus $2,000, which is more than your total initial capital. So in which case you'd get what's called margin called, which is where the exchange would basically take all of your money that you'd put down. And it usually happens before you lose all of it. But sometimes these things happen quickly. And so you can actually just get margin called and lose your money. Why do hedge funds come into this? Well, if you look at the 13F filings that were recently released in terms of who are the largest holders of these Bitcoin ETF funds, Millennium Management own close to $2 billion of Bitcoin ETFs. And they're a hedge fund, which means they like, and they do for a living, selling and buying Bitcoin in order to reach these liquidation levels. And the exchanges also do this as well. They can see where people place their stops and where their limits are and at what price points would these liquidations occur. So they know if they can push the Bitcoin price down to this level, 63,800, a lot of those people that are leveraged will lose that capital, at which point the exchanges and the hedge funds can scoop that up. So that's reason number one. Number two, why else could the Bitcoin price be going down? Well, since the launch of the ETFs back in January, you can see here that the overall activity as we go across to the right is, decreasing ever so slightly. And we've actually got a few net outflow days across each of the ETFs. And so, whether this is just natural because it's sort of, the hype of the launch is sort of dying out a little bit and we're entering into a new phase of the market. But, with less buying activity, we can expect slower price action, a little bit more outflows and decreases in prices as well. And the third reason, minor capitulation, this one's actually quite interesting and very significant. So I had a look on Google, which is, are miners selling, more Bitcoin now than they did before? And sorry, my picture's gone off, but are Bitcoin miners selling more now than previously? Well, over the last 30 days, Bitcoin miners have sold 3,000 Bitcoin. And since October of 2023, they've sold over 30,000 Bitcoin. And this is backed up by lead analyst of CryptoSlate, James Van Straten, who says that we're about 33 days into a Bitcoin miner capitulation, and the average duration of Bitcoin miners selling is about 41 days. So we could expect some more sell pressure to come. This time it's been particularly severe in terms of the sell pressures, but we're expecting that to subside shortly. And typically between 12 and 18 months after a halving, which just happened in May, Bitcoin price is usually quite a lot higher. So not to say that history will repeat, but this is a major impact on miners where every 4 years the rewards given to them for validating transactions is cut in half, and that just happened recently in May. So a lot of the miners are 50% down in revenue, and now selling some Bitcoin to take profits. Basically, some of those miners will have to exit, especially the smaller, less profitable ones. So Anyway, those are 3 reasons why I think Bitcoin is down a little bit in the short term. And I hope you found this video insightful. Thanks for watching. Bye.